What's up, everyone? This is Kenny here from Property Stories. So tax season is coming, right? Actually, it's going to be ending already by the time I publish this video. Never mind. Today we're going to talk about taxes for rental income for real estate investors, individual real estate investors. Company is company. So this is the document that we'll be referring to. Okay, so you can actually download this document for LHD, and this is translated from the original text, which is in Bahasa Melayu. This is the one. This is the original text. So in the event, if there's any dispute, any discrepancies, this is the one that will prevail. Remember, because this is the original text. Okay. So the document, right, published on 19 December 2018, has everything about income from letting of real property. That means income of renting out your property. Okay. So letting a property as a business source, letting a property as non-business source. This part here, this number 4 and 5, let me just break it down for you. If use a property is a business, how is it that we consider that renting our property as a business? As an individual, we work 9 to 5 and then we go and buy property for investment, right? This is non-business. Because when we rent out the property, we don't provide the other services adjacent on top of the property. For example, we don't provide the cleaning services. Cleaning services, we don't provide the security services. That is, the tenant pays us a maintenance fee. We pay the maintenance fee as landlords, and then the tenant is the one that get to enjoy the security and all the facilities. Okay? If you rent out the property as a business, it's like this. I have a building, okay? A big building. Yes, I own this building. I rent it out to you, or then on top of that, right? On top of renting it out for you, I provide to you cleaning services. I provide to you maintenance like aircon repair, security. Then this building, this income that I receive, this property is business source. I rent out the property as a business source. Okay. I also provide the security. I provide the cleaning services. I provide the services on top of just renting you the building, the office building. Okay. So we are just going to focus on the one that is let property as a non-business source. Okay. And I think some of you will be wondering, if let's just say today I rent out my property for people to do short-term rental or Airbnb, is this considered a business? Depends. Are you using that property renting out? You manage yourself? You manage the Airbnb yourself? Then yes, it's a business. But most of you, I understand out there, will engage companies to manage, right? So this non-business source. That because it's that company that you appoint will be the one providing the cleaning services, the check-in, check-out, and clean the place, show your guests, because they run the business of Airbnb or room rentals in that location. Okay. And then we are going to talk about expenses relating to income of real estate. Real properties group as single source. This one is where we talk about, let's just say, property investors. I'm sure most of you have like one or two. You have more than one, 2 or 3 properties. So 3 receive rental income, right? You report it as single source. Okay, that's what it means. Then this is our expenses. We can go to page 13. Now, part 8, expenses related to income or letting of property. Okay, this does not fall subsection 39(1), deduct letting property. Expenses which is allowed a deduction, just under paragraph 40. Okay, these are all must be read together. But this is what you can deduct. I think I've shared in the previous video. But these are the items that you can deduct. Assessment and quick rent, interest. This is the biggest portion for us as investors, right? We take loan. Unless you buy cash, this one you save a lot. Fire insurance premium, yes, you can deduct. It's prorated. Okay. Expenses on rent collection fee, and legal expenses incurred to enforce rent collection. This one, if you have to evict a tenant, then the legal fees incurred, you can actually minus off. Rental collection fee. This one, rental collection fee, sometimes you might have a property management company to actually collect the fees for you. Then yes, or property management company. I used to pay like a property management company to manage the place for me. Then yes, this part here is actually considered a management fee. So you can is the rent collection fee because the company actually helps me to collect the rent also. If the tenant is late, the company is the one that collect the rent. So I pay a monthly fee, a gross monthly fee from the rental, and I can deduct it as a rent collection fee. Okay. Expense on rent renewal, expenses incurred to renew tenancy or to change tenant. This part here, actually, I myself don't know, because you know why? Because when renewal rent, right, when rental renewal, usually I stamp and then I charge the tenant. The agent will charge the tenant if the tenant want to continue. And if find the new tenant also, the tenant is the one that is paying the stamping fee. So this part I don't know actually. But this one, right, if there's any accountant out there, can you confirm? Incurred to renew tenancy, that means usually the tenancy is 1+1. So but at the end of first year, then the second year, right, the tenant want to continue, I can actually deduct their stamping fees from the rental as expenses. Okay. Or change tenant here. Change tenant here means, let's just say after 1 year the tenant choose not to continue. A new tenant, can I still deduct the stamp duty from the stamping fees? This one expenses will include is stamping fees. Stamping fees is including the legal fees and also the stamp duty. Okay, the whole stamping fees stamp cost. Can I deduct it from my gross rental? So any accountants out there, can you please confirm this part E here? What is considered expenses incurred to renew tenancy? Because from what I know, it's only stamp duty for tenancy agreement, and then the legal fees, that one yeah lah, and that is all. And usually this is all paid by tenant before they move in. Expense or repair. Okay, this is to repair. This occurs when, let's just say you got a small minor repair, pipe break or what, or leaking. Not break lah. Break is big issue. Leaking, and then the fan not working, the lights not working. So these are repairs issue. Repairs. Usually these things like where you need to use every day, lights, fans. These are all usually landlord is the one that will pay lah. Of course, within the reason from what I do, right, I usually will, like, the first month when the tenant move in, I give them like, okay, all these small things, all I pay. But after the second month onwards, right, you are the one paying. All these small things you replace yourself because you are the one using the lights and the fan, especially the light bulb. So you pay yourself. You see A, B, C, D, 8.2. This is only 8.2. This is only 6 here. Then we go to 8.3. Initial expenses. Initial expenses is not allowed a deduction from income of letting rental property assessed under paragraph. Okay. This one is advertisement. Example of such expenses are costs to obtain the first tenant, such as advertising costs, legal costs to prepare, rental agreement, stamp duty, and commission for real estate agent. Okay. Commission for real estate agent is here. Sometimes during renewal, the real estate agent, if you ask the real estate agent to talk to your tenant, they will charge you half month. They have the right to charge you half month. But most of the time, I know, especially in Klang Valley, you don't pay your agent when renewal. So that's why when renewal, right, most of the agent will give you a new tenancy agreement because you need to stamp again. Even though it's a renewal, it can be done just one piece of paper. And that one piece of paper you still have to stamp. It's the same thing. Okay? And frankly speaking, you don't need the agent when it comes to renewal. A few months before the tenancy end, you have to contact the tenant. Of course, you are the landlord, you have the tenant number. So not logic if everything is the agent handle. So you have the tenant number. What you do is that you go and ask the tenant whether still want to renew or not, like few months before. Then if it's want to renew, you just prepare the renewal letter. That's it. Then you don't need to pay the half month rental to the agent as commission. No need. That's why most of the agent, right, when it comes to renewal, you see them, they are a bit lacking in terms of follow-up. I have known some agents who actually, because they are the listing agent, I mean, that means I know the owner, you know the tenant, right? And then they don't exchange numbers. This part they don't exchange numbers because as an agent, me as an agent, I also I don't want you to know who is my owner. Then you also don't you take care of the tenant. You also don't want me to take the tenant, right? So you don't want me to undercut you lah. That's what it means lah. But it makes sense also because I take care of the owner, you take care of the tenant. So whenever you want to, or you got anybody want to rent this place, you come and find me. That's it. Everything I settle. So you can continue finding the business and we both can earn together. Okay? But I digress. That is a video for another day, which I will talk about and definitely need to talk about in terms of real estate agencies and agents. Okay? But for now, let's just go back to the initial expense. So sometimes initial expenses, right? You will get questions like this. I get questions like this. Kenny, so since I renovate this house, I renovate for the tenant to come. So can I take the renovation cost and minus my rental? Minus rental. The answer is no. Why? Because your renovation cost is part of the initial expenses. Initial expenses meaning that if you did not do this, you might get a lower rental. So you don't want, right? So you did the furnishing to extract a higher rental, a tenant that can pay more. So that is part of the initial expenses. These are furnishing, everything, all part of the initial expenses. So you cannot minus from the taxes, okay? On the rental income. Cannot consider it part of rental income to minus. Same goes for this advertising cost, legal cost, agent commission. When you get your first tenant, this one you cannot minus. Hence, I ask again, for any accountants out there who knows about rental income and taxes, when this part here, part E, rental income, does this mean that first year, right? Let's just say I got my first tenant, is considered first year, first time. Then subsequent years, even though it's changed tenant, I still can minus off as expenses as to run the property, to run the business, okay? That means the second year onwards, I can minus off agent commission, I can minus off advertising fees, I got minus off the stamp duty and legal fees for preparation of the tenancy agreement. Does that mean like that? Okay. Part E here, and this initial expenses. This is what I want to know. Okay. Next, we go to this part here. Expenses during a period of real property is not rented out. Yes, actually you can still minus, subject to a few things. First, expenses incurred in relation to real property during a period it is not rented out are not allowable in calculating the adjusted income from the renting of real property. However, if the period of real property is not rented out occurs after it has been let out, and it is clear that it is ready to be let out, then the expenses during that period are allowable subject to subsection 33(1) and 39(1) of the Income Tax Act. ITA is Income Tax Act. So if you see example 20, Farhan lets out a double-story terrace house on 1st of January 2017 for 1,000 a month. On 1st of September 2017, tenant moved out and house is let out to another tenant. On 1st of December, on the same amount. Assessment for a year is 500 while quick rent is 50 a year. The letting out house is non-business source. Again, non-business source here is like for us individual working, and then you have a property that is re-rented out. And rental income, and we do not provide any ancillary services on top of this to the property. Rental income taxable under paragraph 40. Rental income gross 1,000 a month, right? So 8 months tenanted this part. So then this one, 112 is 1 month, okay? So total is 9,000. 9, 10, 11, that 3 months, they rent out, right? Here, you can still minus off prorated. House has been let out earlier, okay? The vacant house was already been let out again. As such, the expenses for assessment and credit are allowable in full for the year 2017, even though the house was not rented out for a full period. You see this part here, assessment and quit rent, it counts as full because in between there is rented out, okay? Then there's a vacancy period to find a new tenant. So that's why you can minus off this in full. Same goes to your fire insurance. This part here due to following circumstances. Okay, this one you can read yourself because most of the time at the end we incur this part here. most of the time when we from one tenant to another tenant, we need some time, right? 1 month, 2 months. So this you are allowed to cover it in full because previously there's a tenant. But if previously there's no tenant and it's your first one, remember it's not allowable. Okay. So I hope that helps. Pay your taxes, because when you pay your taxes, right, you make the bank actually very happy with you and you can borrow more. Okay. Income tax for your rental property, doesn't matter how little it is. Make sure you pay if there is need to pay. Okay, make sure you also know what to deduct and what not to deduct. If you're not sure, I'm not an accountant again. It's just sharing based on my own experience. Please go and consult an accountant. Okay, this is Kenny here from Property Stories, and I'll see you again next video. Bye bye.